Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Thursday, February the 9th, 2023. Even though the market was kind of on the slow side today and still acting very strange, it was an extremely interesting day. We've seen a lot of things come into play. We've seen a lot of things being drawn together, and still, in the end, not really presenting me with a solid picture of what everybody else is actually feeling. So in other words, what the market is actually feeling. We did see initially thin conditions, the volume not real heavy, but once that volume came back in this afternoon, they came back in as sellers, and they basically did not stop. And they ran down, they pushed through, which should have been some stronger support zone. There were several large resting orders at various places as the market came off today, particularly in the S&P versus the NASDAQ. The NASDAQ had several points, but they came down, they tested it, they came down again, they cleared them. They swept, they filled those orders, and then moved up a little bit, but then came back and filled the next level down, and then the next level down as they continued to just hit the market. Now, what does that all suggest in moving forward? As I left it yesterday, and we're starting here on the NASDAQ, and again, we're on the hourly chart. So again, I'm leaving my count in that this completed a third wave. I've been asked a couple of times today with comments from subscribers to the YouTube channel, could this possibly be that the fifth wave is complete and that we are starting in the decline? To answer that question totally honestly, yes, that possibility does exist. But let me present both sides of that coin. The market has not actually given us strong enough confirmation that that is the case. And we have, in the very recent past, I just have to pop this out to the 4-hour chart, and I'm going to show you what I'm talking about. We have here was a very similar. We dropped very strongly, came down, started cutting across first waves coming across, and that had to be labeled as, then I was labeling it as a intermediate wave 2. Then it came down and we raced again. We came down again, crossing over. That wasn't enough. We went up, we came down again, we crossed over. It didn't work. We ran up that time into spike, super spike high. And then we're coming off. We came down thinking, okay, that could be the start of it. They ran it up and went above, trying very hard to get back above 12,900. Then that failed. They ran it up. That failed. So if I keep this in an Elliott context, we continue to drop in threes. So if I were to look at this, and again, bringing this back down to the hourly chart, here it is again. While this very well could be ABC down A, ABC B, and then 1, 2, 3, 4, and we get a 5. So NASDAQ, Fibonacci for a fourth wave, most common 0.382, the level 12,109 or 12,010, or basically pretty much anywhere up above. If this is 1, 2, this is 3, we got a little 4, we're coming off in a 5, it just needs to break below 12,367. Now, that's leaving it in a very positive tone. But what my point is, we've seen it. We've seen them knock it down and then race it back up. Knock it down, race it back up. Knock it down, race it back up. What's to say that this just is more extended, but they race it back up? And there truly would be not much in the way if algorithms and everybody came in tomorrow on an expiration and started to pump this thing higher, just starting to go. As all of these stocks resume back to the levels where they want that expiration. Now, that could be an impossibility because we still yet have got to get through the Asian markets and they get to put their 2 cents in what they think what happened over here today, and then against what's happening in their own markets. And then we have the European markets, which, by the way, if we just take a look, that within the European markets, they had a CPI number that was released yesterday for them. And it was very positive in terms of like, oh, it's improving. So therefore, inflation isn't da-da-da-da-da, same thing that we do. So it was a pretty dynamic market for Germany yesterday. And what that then produced, from what I'm understanding from, again, a subscriber, is that the German markets, I mean, the European markets came over and they started taking our bonds. Because what's good for Germany has to be good for the United States, since we're the ones that seem to have started this whole roll of easing, et cetera, or just stopping the rate at which interest rates are going up, even though our Fed has said, no way, we're going to continue to raise the rates, and we will determine. In fact, the Fed governors at their meetings will determine, not the market, the Fed will determine what is best for them to continue their fight with inflation as to how far and how much those interest rates should rise. Well, they're getting pushed into a corner to react. And now the market's kind of coming back saying, okay, maybe you should start reacting now. We've seen a very strong downturn in the bond market. We have seen the yield curve continuing to widen. That's not a good thing, folks. It's not a good thing. We continue to basically not pay attention, but do pay attention, but not believe that it could still be a possibility, is that, when a yield curve gets inverted and it stays inverted, it's usually starting to tell you that within 18 months, that's a year and a half, from the top, which was January of 2022. So we basically have all the way out into June before we would have to really consider or realize, oh, gee, maybe we are in a recession. So that whole conversation remains out there. And so we're getting a reaction again from within the bond market, where we saw the 30-year bond, which was very comfortably trading above 129 to 130, decide to back off and actually slide below 128 today, managing to get itself back above 128 by the end of the day and the close. Now, the 2-year note screaming at us because it's rate going higher, higher, higher. We look down, go further down the curve. We've got all the treasury bills, all those auctions. Today was a 30-year bond auction. Did not go as well as people thought it was going to go. There wasn't quite a hunger for the rate that they were kind of putting it out there at. So, it's happening. Stop is happening. And how the market wants to interpret it is now being put into play. So what can I say about the NASDAQ? Looking at it on an Elliott wave basis, looking at it on a technical basis. And that vein, we still have downside room to fulfill a fourth wave of minute degree. And that would come down to this support level at 12,110. Now, beyond that, I would start to side with this. Actually looks like it could have been the completion of the B wave, right? Because remember that I'm considering this an intermediate B wave. A, B, and been looking for the C wave to complete. Now, at that level prior, it had reached a top Fibonacci level that I expected to contain and finish the move. But then once I relabeled or changed the labeling to be more reflective of exactly what I think the market is doing and giving more room that the primary degree A wave is likely not even complete, let alone that B wave. So with that in mind, if we're getting to this B wave, then we're just expecting a C wave down. Yes, I would be expecting it to go to sub 10,000 before it would be complete. Now, if it were to get itself up to this, like I've been talking, up to 13,700-ish, which is the top of that X wave, then I'd be looking for a much more flat, total flat A, B, and then that C wave down. Then we'd only be looking for this thing to come back and get close to that level, which was 10,485. So, but if we can finish it here, then we're likely going to drop down to a sub level. Now, again, this is just a fourth wave. Now, if I had to go and take this off and consider that this gets changed, and that's 3, 4, and a 5, and this is all over, and this is the beginning stages of the A wave down, of wave 1 down within this process, then we need to just take a look. And what I'm really looking at here is that we probably still have this shot. We have the potential. We can go back up and reach above 12,950. Now, again, I'm going to put in some fibs that would cover that fifth wave. And let me just open this up. So I'm starting basically all over now. Let's call it like we can see it and see if we can get something that's going to make sense. And I'm going to go there. Whoops. There. To there. To there. If it only comes down that far and we start to rally from here. We're moving. We still have quite a bit of upside potential. Serious upside potential. Now, base that against what we're seeing, base that against still earning reports that are coming out, base it against what we see, and it's not going to work. So I'm going to take that one. Now I'm going to compare it to one more and see if I can open this up a little bit. And now we're going to go to that C wave. How does that fit into the whole picture? And that would come into here. Now we've got a little bit different look. And coming up, we'd have resistance at 12,885, and then we have resistance at 13,062, which does create a little bit larger high, but then we have 13,206. So you see, we have much cleaner levels for where we can expect this thing to end. Should. Now, again, I'm not saying that that's what's going to happen, so please understand. Should it flip and go higher, then that would be important to understand where can it end up. But if they really get to move this thing and they get gung-ho and really start to go with it, then I'm looking for it to kind of jump and to really catch fire again and start tomorrow. I don't think carrying this out till the CPI is really going to be in the best interest. I don't think that that's going to happen. I think that there's going to be some changes are going to start. We may see it all backfire tomorrow. We may see it all like, nope, it's not going higher. So again, I'm going to check in a moment to see where things are lining up. And I'll do that right when I'm done here with the NASDAQ and in the S&P to see where are the indexes lining up. Option-wise, where's that headed today? So we'll see it after today. But right now, I think we still have some additional downside available. Like I said, we have 12,100 in line in the picture. And that could complete this. Or it's done at today's, and then we just start moving up from here. A clean break back down to that hourly chart. We've now come down and we broke and came back up to the hourly 200. The break you see pushed it down pretty quick. Added fuel to the fire. Algorithmically, it was a trigger. Sell on that break, and they did. got it back up to it. Does that reset it? Don't know. But if we start to move higher, but right now in the hourly, the 4 is very close to getting ready to cross above that 200. And then the 8 will be right behind it, and the 20 and the 50. So these are basically in alignment to go down now. They're just needing to get below the 200 to make it all together now. So that goes against upside. So if they're going to turn this thing around, they got to do it and they can't stop. So again, we've seen it. We've seen it. That was the last time. Oh, they're all done. That was it. No more. Boom. Want to bet? Boom. Yeah. Boom. Want to bet? Yeah. So we're getting these battling grounds. And we, the traders, have to go trade it. Now, if you can stay as a day trader, even if you're a swing intraday trader, keep your wits about you, keep your positions clean, keep your stops in place. Don't get caught up in this noise. If you're getting signals, you must trade your signals. And you must be fluid enough to roll with the punches, as we call it. Getting stuck or even getting into the deer in the headlights top stuff, oh, dangerous. And it hurts. And I know because it's happened to me. So, voice of experience, do not let the stop get walked over by you. Honor your stops. Reassess, retrade. Again, it's all possible. Just keep your mindset intact. All right, I'm going to go over to the S&P. Then I can get over to those individual indexes, and we can start talking about what we think can be going on. S&P, same deal. A, B, 1, 2, 3. See, S&P is always making it a little bit cleaner than the NASDAQ at the moment. So ABC, ABC, but this is 1, 2, 3. So little fourth wave could be what they're doing right now. They're not getting a whole lot to hold on to. You know, it goes up and then it's coming right back down. So, but in any case, wave 4, if it is a wave 4, has support down at 40.60, plus or minus. That's the 3A2, that's the fib. It would be a nice complete ABC down, and it would set the stage for this thing to just start to rally. That can happen overnight. That can happen overnight. 30 points definitely can happen overnight. And if they decide that that's okay, now they're ready to start buying it again, we might sort of be on its way by tomorrow morning. Again, just taking a very quick look, I don't believe, well, only thing we've got coming out for tomorrow, consumer sentiment at 10 a.m. Eastern. A treasury statement at 2 p.m., but that's green, and I don't think anybody's going to be paying attention to it, but they might. You never know. So 40.60 is our next support level. If it starts cruising through that, I'm going to be very tempted to just go, it's all done, and I don't know. This was very ugly, but I'm going to make it out, and I will get through it. But if it breaks 40.60, we're opening the door. We have some support at 40.48, additional support at 40.13. And then we're breaking below 4,000. Took them a while, but they did get it below 4,100. They tried to get it back above. It failed. They brought it back down, took it deeper. They tried to get on the close to get it back above 4,100. That's failing. They still got a shot at doing it, but they're not racing in to buy this right now. So it's going to be interesting because tomorrow is an expiration, and a lot of it has been winding up into that level. So we got a lot of unwinding going on in Apple, a lot of unwinding going on in AMD and Amazon, in the banks, and all the way down. Google got smashed today. They would continue that. All of these stocks that they've been pumping up. Meta, you see, they started to bring that down. So that's actually this dream of 200, I think, is going out through the window right now. And everybody's going to be turning that stock over to Metaverse and Mr. Zuckerberg. Here you go, $40 billion worth. Pay us. Trust me, that he may wish he never did that. But we'll see. Microsoft, was up solidly today. Now it closes down 3. So that's changing. Tesla managing to hold on to the upside dream. But again, it can fail. And they can bring that back below 200 in a heartbeat. In the S&P, moving average-wise, you saw what happened when we broke, first of all, the 50 and the 20. It accelerated. Then we held right there at that support level very briefly. That was 41.23, an important level. It broke and it forced the acceleration. Brought in a whole lot. We had resting orders at 4,100. Came down, teased, came down, teased, came down, teased, came down, filled. Bounced off of it, again came back to the next level, which was 40.90. Filled. And continued to push lower. So as these resting buy orders, these larger players putting their buy orders down there, got filled, the rally failed. So 40.59, I think below that, pretty much sealing the deal, and I start rearranging this labeling. Again, remember, we let the market tell us. I cannot tell the market. I wish I could. I'm just not big enough, and I can't will it into do what I feel it should do. All right, let's start taking a look at what we have in terms of, let's look at first at the ES options. Oh, wrong one. Sorry. Let's start here. Let's look at the ES options and see what we got going on. All right, so these are tomorrow. Let's see where we got our open interest, folks. 4,100 surrendered. So that's going to go. Where the biggest was against 41.50. So you see how that adjustment came down? 4,200 continues to have the largest open interest, but didn't really trade. This is all starting over, so this starts anew. So I don't know what the volume was today, but the open interest remains the largest right now out of these, right there at 4,200. Now again, as we come off 40.50, we saw a large player come in and buy a whole bunch of those 40.50 puts that expire tomorrow. So we're a lot closer to 40.50 than we are to 4,200. So that might be the ticket. Pay attention to what they're trading. And outside of that, don't know what the size was, but the next one up would be 4,100, which we've already surpassed, but it could still come into play. So again, now we're looking at, they still got it up there, 4,100, 4,150, 4,200, but you can see 4,200. I don't know. If they pick it up and really get this thing going, then yeah, then it has a shot. Otherwise, I wouldn't be able to tell you. But these are trading now again, so a lot can happen between now and tomorrow morning. If we go over and let's take a look at the NDX does not actually trade that heavily. So I'm going to go over to the Qs. Take a peek. These are what is expiring tomorrow. Wow. 301, the high was 308, the low was 300. And come right down here to that 300. Let's look at where the trading was. Puts. Buying those puts. Buying those puts back if they were short them. Obviously, it was only 26,000. That's doubled now. And all the way up. 301, 302, 303, 304, 305. Filling in the blanks. 307, filling in the blanks. Here we have 302. A lot traded, but then again, it stayed above 302 for a great portion of today. Where's all the biggest open interest? Remains at 310 right now. Close second, 295, which is probably where it's headed till tomorrow. So we got it. You can see where they're building it up. And that could just be them getting out. If you were long these, you're going to try to get out of them because you want to, preserve some of your profit. So in terms of what they're buying, 310s, but I don't know how much of those are sells, how much of those are buys. One last thing I can double check here in the Qs is I could see what the summaries were. You can see puts skunked calls today. So you could see the switch. You could see that they're starting to switch. They're starting to move out of those and come into these. We can look over SQ, the options. We can take a look at what's going to expire tomorrow. Bing. Remember, this is the ultra short. 35. Bing. That's what they were buying. Put-wise, that's if the index was going to go up. What were they were buying? That would be if the NASDAQ would go up and the SQs would drop. They were looking 36.5, 36, 35. So it's pretty wild. But they're looking 35 on the ultra short. So I would imagine that'll switch real quick. This is the ultra long in the SQs, TQs, I guess. Yeah, I won't go to there. Let's try that again. T, Q, 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 Q. Now you're telling me you can't find it? I see it there. I just tried to put it up. There you go. Oh, I put in the wrong, I put a forward slash in there. Okay. So they were actually thinking that they were looking for it to go up. So where are they putting in these putskis? Yes, 25. So it's gaining momentum. Spiders for tomorrow. Oh, they were looking for 410s, 412s, 414s. Yeah, we got up to 414 today. That brought those alive. 415. It's 407. We're there right now. What would be the next size? They were looking at scooping up the 408, scooping up the 410s. Vol, yep, it's in. It's there. So you can see that they are lining it up. They are lining up, like trying to go like they don't know either, and they're going to try to protect both sides. So again, we're getting our, let's look at the stocks. Puts, big, 150. Where's it sitting? 150. They're going to try and bid this thing up. It's like, okay. Do what you think you need to do. I don't think it'll last unless if this drops anymore. But that gives you a hint. The 155's big traders, but you see, I think that was just selling. I don't see premium in this stuff right now, but all that could change overnight. But 150 seems to be a ticket. And below that, then it'll go real quick. Now, what happens here, again, is if it starts to slide through these strikes, it forces a lot of adjusting. And they do it via the stock. Now, the biggest player in there has got to be this guy. And we're going to take a look. Look at that. And 210. You see why they're going to try to bid this up? That's why. That's where they're heading. And to 200 now, they're looking for it to come down below. Scooped. Look at that. That was coming in. Look how many traded. Now, whether that was selling or buying, I don't know, but I'm going to take it was more buying. So let's go down and look at something else on these guys and see what the stats were today. Still sitting on the call side, still heavily on the call side. So You see, that's why they didn't let it fall, because it's too heavy. So this thing starts to come out and come under pressure overnight or tomorrow, get out of the way. They'll start killing it pretty quickly, and they won't stop. It'll slide back below 200 before you can say Merry Christmas. Some of the other bigger players, Microsoft, they're very favorable because all the artificial intelligence stuff going on in the conference, et cetera, et cetera. Where do we see 275, which, by the way, they got close to today. Dropping down, they're dead. What's going to be up next? Well, at the monies right now is the 260s, 260, 250s. Those are the at the monies. Nobody really cared. You want to put them into play? Sure do. Let's do it via the puts. Let's do it via the puts. So things are lining up. They're putting in their protection. Not getting strong clues to where people are feeling, because I think it's like this today's move really tossed it out. But we can see all that change tomorrow, both directions. So let's stay on our toes, folks. Truly stay on our toes. Follow your signals. And be nimble. It's going to move, and it's going to move fast. It's going to be crazy. So stay alert. And if your choice is not to trade, that could possibly be the best choice you're going to make. The one thing we don't want to do is just to step in and create problems, and because we're not being able to really play along because the market's moving too fast. Particularly, it would be in the S&P and the futures markets here in the S&P and the NASDAQ. It'll move fast, and if it moves fast, before you know it, you're down $1,000 or $2,000. So as a recommendation, if you're trading a smaller account, but you really want to get in here and trade, you might want to elect to do the micro. And I know many people already do. But even in the micro, play by your rules. Have your stop in place and honor it. All right, I'm going to leave it right there. Tomorrow will be an interesting day. The next update, though, will be on Sunday, the 12th of February.